There is a number buried in Africa's newest mobile industry report that should stop every telecom executive and regulator in their tracks. Almost 1 billion people on this continent already live within reach of a mobile signal. And they are choosing not to use it. Not can't reach it, choosing not to use it. That single distinction is about to define the next decade of Africa's digital economy. Here is a question every telecom investor and regulator is sitting with right now. For over a decade, the growth story was simple. Build more towers, lay more fiber, extend more coverage, and subscriber numbers follow. That playbook is running out of room. You can cover a village completely, full signal, reliable network, modern towers, and still have most of that village offline. Because a smartphone costs a meaningful share of a month's income, data costs more than it should, and nobody nearby can show a first-time user what any of it is actually for. So what does the industry's own numbers say about how big this opportunity really is and where the growth is actually going to come from next? Here is what you need to know. Key point 1. The headline numbers are bigger than most people realize. According to the GSMA's Mobile Economy Africa 2026 report, published in June 2026, mobile technologies and services contributed $240 billion to Africa's economy in 2025. That is 7.8% of the continent's entire GDP. The sector supported roughly 13 million jobs and generated $45 billion in public revenue for governments across the continent. The GSMA forecasts that contribution will rise to $290 billion by 2030. That is a real, substantial, and still growing part of Africa's economic base, not a niche technology story. Key point 2, the usage gap in exact numbers. Here is a number that matters more than the 240 billion. Despite widespread mobile coverage across the continent, roughly 961 million Africans who live within coverage areas are still not using mobile internet. The report is specific about why. An entry-level internet-enabled handset costs on average 24% of monthly income across low and middle-income African countries. And in some areas, that figure rises as high as 80% of monthly income. That is not a minor inconvenience. That is a device costing the equivalent of weeks or months of earnings. A village with full signal strength. A modern tower visible from every rooftop. And a majority of residents who have never gone online. Because the cheapest available smartphone costs more than a month of local income, and data pricing makes regular use unaffordable even for those who own a device. Coverage solved. Usage unsolved. Same village. Key point 3. Prove the affordability fix actually works. This is the part of the story most coverage of this report misses entirely. This isn't a theoretical policy recommendation. It has already been tested with real results. In early 2025, South Africa removed a 9% excise duty on entry-level smartphones, priced under roughly $150. In the 9 months before that tax removal, month-on-month sales of entry-level smartphones had been declining by close to 8% every month. In the months after the tax removal, that decline reversed completely. Sales grew by nearly 4% month-on-month, and the industry recorded a sharp drop in the number of people buying basic feature phones instead of smartphones, as more people could suddenly afford to make the switch. That is a controlled, real-world, natural experiment. One tax policy changed. Nothing else about coverage or infrastructure changed, and adoption behavior moved immediately and measurably. It is the single clearest piece of evidence in this entire report that affordability, not infrastructure, is the actual lever. The industry is now trying to scale that lesson. In March 2026, the GSMA and a coalition of 6 leading African operators announced a pilot to bring $40 4G smartphones to the Democratic Republic of Congo, Ethiopia, Nigeria, Rwanda, Tanzania, and Uganda. GSMA's own research estimates a $40 device could bring an additional 20 million people online, and a $30 device could reach as many as 50 million. Key point 4. Operators are repositioning around a platform model. The report also describes mobile operators shifting from pure connectivity providers into what it calls digital transformation partners. deploying AI-powered services and opening network capabilities to developers through standardized APIs under an initiative called GSMA Open Gateway. More than 3/4 of operators surveyed cite this shift as a core strategic objective. This isn't abstract. In May 2026, a Kenya-based company called NetAPI Telecom became the first African-headquartered company to join GSMA Open Gateway as an official channel partner, launching with a portfolio of 13 network APIs, including tools that let banks and fintech apps verify a SIM swap or confirm a device's location instantly, replacing slower and more expensive fraud prevention methods. Separately, 3 South African operators are already using this same kind of API to fight fraud and protect digital identity across banking, insurance, and retail. At the same time, the report confirms operators still plan to invest over $76 billion in network infrastructure between 2024 and 2030. So this is not operators abandoning infrastructure. It's operators recognizing that infrastructure alone no longer moves the growth number the way it used to, and building new software-based revenue streams on top of what they've already built. So what does all of this actually mean for how governments, regulators, and investors should be thinking about Africa's next phase of digital growth? The strategic insight. Here is the reframe I want every regulator, investor, and policymaker watching this to sit with. For a decade, growth in Africa's mobile economy was primarily a capital expenditure story. Operators spending money to build networks. That story is now secondary. The next phase of growth is primarily a policy story. Device taxation, spectrum costs, data pricing regulation, and digital skills investment. And critically, this is no longer a theory. South Africa just ran the experiment and got a clear, measurable answer. One tax change, no new towers, and adoption moved. That should change how every finance ministry and telecom regulator on this continent thinks about their own role in this growth story. The honest caveat is that the $40 smartphone pilot is currently running in exactly 6 countries. That leaves most of the continent watching from the sidelines rather than acting. An operator can build the best network on the continent and still miss its growth targets if government policy keeps a device priced out of reach for a third of the population it's trying to connect. So here is what actually needs to happen next, on both sides of that equation. The practical takeaway. 1. Governments should treat device and data affordability as core digital economy policy, not a telecom sector only issue. South Africa's excise duty removal is now a real, measured, replicable model, not a hypothetical recommendation. 2. Every African finance ministry should ask whether their country is part of the current $40 smartphone pilot, and if not, what it would take to join the next wave, or to run South Africa's tax reform independently in the meantime. 3. Regulators should track GSMA Open Gateway rollout in their markets as a leading indicator of whether operators are genuinely following through on becoming platform and API companies, or simply describing existing services differently. 4. Digital skills investment needs to scale in parallel with affordability fixes, not after them. Lowering the price of a smartphone doesn't help someone who has never used one and has nobody nearby to show them how. 5. Investors evaluating African telecom operators should weight digital services revenue growth and API monetization more heavily than raw subscriber growth, since that is where the sector's own report says future value creation is concentrated. Conclusion. Africa's mobile economy just crossed $240 billion. And the industry that built it is telling us, in its own numbers, in its own real-world experiment, that the next phase of growth depends less on towers and more on policy. That is the same usage gap story we broke down back in a previous video on this channel, now backed by fresh 2026 data and actual proof that fixing it works. If this connects with how you think about digital inclusion and affordability, share it with someone you know who is also working on digital inclusion and affordability. Don't forget to subscribe and turn on the notification. Thank you for watching, and I will see you in the next video, which is showing on your screen now.